I've invited to the program Rubina Ahmed Haq. She is a personal finance expert, of course, a frequent guest on our program. So hello, Rubina. I don't know if Rubina can hear me or not, but as they fix, oh, you can hear you. Perfect.
I can hear you.
Okay, wonderful. So if people want to be part of this conversation with me and Rubina, you can do so by asking your question. Head over to CBC News' Facebook page. That's at facebook.com/CBC News. And as we wait for those questions to come in, Rubina, I want to first ask and first and foremost, talk about attitudes right now, because I think there's a lot of fear out there, seeing the volatility on the market, certainly seeing the drops earlier in the week in the market as a result of COVID-19. How should people be approaching this? Because there is a lot of panic right now about their personal finances getting hit.
Yeah, if you're invested entirely in the stock market, this has been one of the worst weeks in your entire investment history. I mean, even 2008, 2009, we did not see a week that was this incredible. Again, you know, it really goes back to what your investment horizon is. If your investment horizon is, you know, you're retiring this summer or maybe early 2021, you're probably really concerned about the kind of funds that are going to be available to you. But if you're in your 30s and 40s and you're just investing on a monthly basis or a quarterly basis into your RRSP, this is something that you should just see as a market event. And again, you know, really looking at what are you invested in. Definitely, if you're in those safer stocks that have a history of being able to recover from big market volatility like this, you don't have as much to worry about. So it's more about what your plans are with that money and when that plan is going to be happening.
Okay, well, let's break that up then, because again, if you're in your 30s, as you say, not such a big deal. But what if you are already living off of your saved income, your retirement income? What do you need to be doing? How do you deal with this type of shock to the system?
So I would hope that somebody who is in retirement has already moved some of their money into more conservative investments. But if you have not, what you really need to look at is what money do you need in the short to medium term. So the next 2, 3, 4, 5 years, that's the money that you need to be really most concerned about, because the money you need after 5 years, you still have a little bit more time for that money to recover in the market, and you don't have to take it out of those investments right away. You can wait for the markets to recover, and then you can decide whether you want to sell it or not. So really, what are your immediate financial needs? You need to sit down and look at, you know, what it costs you to run your household, what kind of entertainment costs you have, your grocery costs, all those things in combination, whatever your number is on a month-to-month basis. Be sure that you have enough money going forward, and you might need to sell a little bit. But remember, even if you're selling today, you wouldn't be making the money that you were making 3 weeks ago, but you're still in the money if you were invested for the long term. So say that money's been there for 10, 15 years, you're still doing well on those investments, just not as well as you would have done if you'd sold just a couple of weeks ago.
Okay, let's now pick up some questions from viewers here, because, you know, certainly yesterday we saw the Prime Minister announce another rate cut to the Bank of Canada rate in this country. And this question goes to that. This is from David Lewis. He wants to know why the banks I deal with, he says, TD and Manulife, are not passing on the bank rate cut to individuals, who I assume was the intended target of the cuts by the government in order to stimulate economic activity. Is this a case of the big banks profiting on this emergency? What do you say to that? Is it just that the rates haven't been passed down quite yet?
So the rate cut came late this week, and so the expectation is that the banks will lower prime. And they've had an injection of funds. You know, there was a meeting of the Bank of Canada governor, the finance minister, and from OSFI, and all three of those individuals making announcements about how they're going to support the economy going forward. And some of that money is going to help support the banks. So it would be really unusual if they did not use this rate cut and that injection of funds to pass it on to consumers. Really, the reason they've cut the rates, the Bank of Canada made it very clear, is to make it more affordable for Canadians to make their payments on their loans. So if you have a variable loan, or if you've borrowed money from a line of credit, once that extra rate cut, because remember, the Bank of Canada also cut rates just 2 weeks ago by 50 basis points. So 1 percentage point the overnight rate has come down in a very short amount of time. So for those people with a floating rate mortgage, a floating rate loan, they're going to see their monthly payments come down, and that's going to help them through, especially if they're off work because of what's been going on with COVID-19.
Okay. Another question here, Rubina. This is from Lisa Hodges, again on Facebook, and this is what Lisa wants to know about. Who pays the wages and bills for people who self-isolate? With bills still need paying, mortgages and rent need paying, groceries need to be bought. Does short-term disability kick in, or will employers pay sick leave when your reason for staying home is precautionary rather than actually being sick?
So, from my understanding, speaking to employment lawyers, short-term disability would not kick in unless you're actually sick. There has been some changes announced to unemployment sickness benefits. One of those big developments have been is that if you are actually sick and you need to stay home, that you can collect EI benefits immediately. You don't have to wait a week. You get 15 weeks of EI sick leave. You can start collecting that right away if you're off for an extended period of time. If you are off because you've been in a country and now your work is asking you to stay home, the understanding is that you'll be either working from home, or that because your employer has asked you to stay home, that they would pay you for that time. This is sometimes something that you have to now talk to HR about. Look at your employment collective agreement. See how you are protected. These are really uncharted waters when it comes to the way that companies are going to deal with an exodus of people really not being able to be in the office. And if you are asked by your employer to self-isolate, there is hopefully some pay that you're going to get during that time for some work that you can do from home.
Okay, I'm going to bring in another question here. This is actually from Jack Heinings on YouTube. He wants to know, what is a safe investment? Stocks, gold, bond, Bitcoin, they all went down, he says. What is the safe investment right now?
So by and large, people who invest, they have good asset allocation. They invest in all different types of products. They don't just put all their eggs in one basket, so to speak. So not all in gold, not all in Bitcoin, not all in one place at all. So buying index funds, buying funds that follow the performance of markets, whether it be the TSX or the S&P 500 or the NASDAQ, whatever it is that you feel most comfortable with is usually what gets you the best results, rather than trying to play the market, get in and out, buy certain stocks. I mean, even if you are interested in buying bank stocks, you can buy ETFs that have a collection of bank stocks in it. That's a safer bet than trying to buy just one bank stock and hoping that that bank is going to do well. So my best advice to him is that he speak to his financial advisor, that he understand his risk tolerance. I think a lot of people are now second guessing what their risk tolerance actually is. When markets are going up, everyone can say, I've got high risk tolerance. I can totally invest in the market because everyone's doing really well. But now that we've seen what the markets can do in a very short amount of time, it's really important for people to really check their gut. Are you that type of investor? And invest in those places that are going to make you feel comfortable for the long term, where weeks like this are not going to make you feel like you're passing out when you open your portfolio in the evening.
Okay, let's bring in now a question from Nick Neufeld, and this is on YouTube. And Nick is a student, wants to know, what are some precautions I should take as a student financially?
As a student, one thing he's got on his side is time. So if he has started investing at that young age, really, as long as he's well diversified, and he's putting money in on a monthly basis, he's contributing to his investments over time, he is going to do well. And he's going to see other dips in the market. This is not the last time we're ever going to see markets fall this dramatically. I mean, we saw this in 2008, 2009. There's been other examples of it in the 90s and in the 80s. The 87 crash, of course, is one where it was even worse. Although I believe Friday or Thursday was a worse day than that 87 crash. But up until then, that was one of the worst days on the market worldwide. So as a student, do those things that you should be doing. If you are investing, make sure you're well diversified. If you're just worried about your cost of living, I mean, just be careful, because right now, when you're graduating, companies may not be hiring as much because their profits are down. They may not be hiring as many young people. So just be careful with the student loans that you're getting into. Make sure that you are managing your expectations properly when it comes to the kind of job you're going to land and the salary that you're going to command, and set yourself up so that you can afford the lifestyle that you're in. Don't set yourself up for something that's unaffordable, and then down the road, you're finding yourself that you're going into debt in order to fund that lifestyle.
Okay, you mentioned debt, and we always say that a mortgage is a good debt. But given the interest rates and the cuts being announced late yesterday, this question from a viewer who wants to know, and this is from Georgia Jane, is this a bad time to buy a house?
So there's never a bad time to buy a house. There's never a good time to buy a house. The time to buy a house is when you can afford it and you've done the math and you've understand that you can make those payments for the long term. And you've done your own stress test. You've added 2, 3, 4 percentage points to the offer that the bank is giving you and saying, yes, if interest rates were to go up, I could still afford this loan for the long term. So it's really about how much down payment do you have saved? What are your job prospects? Do you feel that your job is solid and that it's something that can carry you through where you're going to be able to make your mortgage payments? The one thing that's really, it's such an unusual time right now. 2 weeks ago, if you'd asked me, I would say the real estate market is really going to see a lift this summer because of the stress test being eased in April and because of this interest rate cut. Even before the emergency one, there was still another cut that came that made mortgage rates lower, meaning people could afford to borrow more. But now with COVID-19 and many people basically housebound, I'm wondering how the real estate market is going to react to that, because people will not be going out to open houses. People may not be as encouraged to meet with their realtors and see other people's homes because they'll be afraid of getting sick. But I think that with low interest rates and with once we have this under control, we'll definitely see real estate prices rise this summer.
Okay, Rubina, this time has gone by entirely too quickly. I only have about 30 seconds, and I want to ask this of you, though, before we go. Here we have the federal government lowering the interest rates on the Bank of Canada rate. Very quickly, though, is this the time to go spending money, though, given the uncertainty right now? I know they want to stimulate the economy, but is this a good time to actually be spending money?
Well, I think that we should continue to spend money on the things that we need. And I mean, we've seen a lot of people going into the grocery store and stockpiling. That's not what I'm suggesting. I'm saying that still go out and buy those everyday items that you need. If you are thinking of buying a big ticket item, I don't think you should be afraid. But don't get into debt. Don't get yourself into too much debt.
Okay, Rubina Ahmed Huq, thank you for that. And stay with us. You're watching CBC News Network.